Okie dokie. Hopefully everyone's having a great Monday. Wait, no, it's not Monday. It's Tuesday. Tuesday. Um, well, let's talk a little bit about shorter term balances. I know we've talked about longer term balances for a while now, but let's get into shorter term balances and how we can trade them because the last couple days was, I think, one of the easiest ones to see, at least visually, um, and sort of how I played them the last couple days. So, we discussed the idea of balance quite a bit, right? And I have this thing in my channel. I pinned it, but a little bit on auction market theory. I suggest everyone read it. It's a short read. It just goes over some of the basics of balance in auction market theory. Essentially, that's all I use to trade. Okay, and the TPO, the market profile, helps me see that. And when I'm saying the TPO, when I'm seeing the TPO, right, it's gonna right. If you're familiar with volume profile, it's gonna look similar. Um, you can use volume profile or market profile. Both will yield pretty similar results when I'm not talking about balances. But when I talk about balance, right, we see, I guess, I guess a bulk in the profile, right? That's where we spend the most amount of time. And when we get overlapping value, that's what I call a balance. Okay. So in this instance, these 3 sessions back here were a short 3 day balance, right? Makes it pretty darn simple. And when I see a balance, I'll typically combine the sessions together and we get a nicer picture of where we might reject if we do step out of that balance and where we might go afterwards, right? So this session was a good example. We open here, don't trade any higher. Um, that when that happens, we go down and look for prior value, right, which happened to be down here. But anyway, this is a short 3 day balance. We'll talk about balances in a much shorter time frame, and I'll show you guys how you guys can see it on a candlestick chart too. Um, you might need volume profile though to help you out. But in this instance, right, I'm gonna do this so we can draw on it. All right, sent this in the group a couple times, but so we have this day of balance, right? I guess if you wanted to, you could split it into two. This and this down here. Next session, right, Friday, we open here. This highlighted A is the open. This M is the close, okay? So we open here. Don't accept into this one. So we have this first initial balance. And this one is clear as day, right? We get 2 balances here. And then Sunday, we actually opened. We gapped up and actually traded right into this set of single prints. We didn't see it during the RTH, but all the RTH did was accept above, right, within here. All right, so we open here. We spend quite a bit of time within this balance, right? So what happens when you break out of it, right? We go looking for value higher. So that's why we have 2 distributions on this day, right? And then we basically end up trading within this set of prior value. And then so we have this distribution here, and going into today, right? What's the level we're looking at? 4171. That's sort of where the shelf is, right, on the profile. Also seen on the volume profile there, where you get the highest node there, or one of the higher nodes compared to all the smaller ones down here. And then guess what we do? Spend time, right, in the upper distribution of this session. And what happens once you break out, right? This is why we're watching that 93, 94 level all day. That's why we sort of failed to break out for the first half of the day, right? We see overlapping value again. And what do? We trade higher. Once we get that breakout, we trade higher. And where do we go to? Right? Prior value. That's why I was I was targeting this 4209. If we got over here, right, 4220. But when we're getting this breakout, I was looking back and saying like, why was it so hard to get to 20? Looking back, I missed a level, right? This was your value area low, 4215. I think this is what we traded exactly up to. 4215. This was the value area low from this session. And if I split this apart, I see it clear as day now, right? Why that might have been a decent level to target. So my fault on that. But you know, that's all that is, right? That's what I was trying to get across when I was sharing these sorts of um these graphics. If you guys didn't get that, right? This one sort of shows it here, but where value rotates away, but you know, eventually comes back, and what happens when we start getting away from it. So, you know, I know everyone has their support resistance. Try to it's essentially that, right? Support resistance levels. And what helps is kind of working with ranges instead of just simple support resistance, right? If you look at a candlestick chart, go to maybe a 5, right? We can sort of try to see what happened, where our balances were, right? If you use simply a candlestick chart, it might be a little difficult, right? You just try to find the areas on the chart where the most time is spent. Right, in this case, it might be over here. We might have another smaller one down here. Right, and we have one right over here. Right, one up here. And this is the one we traded into. Okay. So we'll do a little graphic, but that's all markets too. Let's say these are our little balance zones. Right. This is all markets too. Okay, so we'll trade within here. Once you get that breakdown, we're in imbalance mode, right? And what do? We go look for either prior value, or we go somewhere else to find new value, where you'll consolidate for a bit, okay? Let's say we break down from this one, right? And typically on breakdowns or breakouts, you'll get a retest, which becomes pretty helpful. But so let's say we get that, right? Play around and make a balance here. We get above. Now what are you targeting? Right? It becomes simple. That and potentially that if it goes higher. Okay. All right, so maybe we trade up, maybe reject once, but more, you know, this is just how markets move. That's all balances and what auction market theory tells us. So I know it might be a little bit harder to tell. Actually, no, this makes it pretty easy to see. We just play with shapes, but you know, you can do the same thing with simply volume profile, right? If we just take let's go from this high down to this low, right? So it doesn't count all this stuff here. Where are the balances? Right, we can do this, and we can say that, right? We just take the high volume nodes and just focus on the extremes of it, right? And then all, you know, when we're in the middle of a balance, really tough to initiate a trade, okay? Unless something else is hinting towards it going, you know, a different direction, but really hard. So that's sort of why I only initiate trades at the extremes, right? Since I only go long, I'm longing when price comes down to the lows. You know, when price comes down to the lows, I'm longing. You know, or if it's breaking out, I typically don't like to chase breakouts, but it is what it is. Sometimes I have to, right? Right. Even using volume profile, it gives you pretty decent idea of where the balances are. You know, volume profile is just volume created at price. TPO is just time spent at price. So they're typically going to overlap, but you know, and yeah, that's essentially how I traded today. You know, levels worked decently well. There was actually one part of today that which was really confusing me. We can go over that too, but so right, remember we were talking about when we're in balance, we're in a 3-day balance here. Merge the profiles, and what are the levels we focus on, right? Structures within it. So value area high, value area low. Those are the highlighted levels here. And you know, I had this level here at 87, which was I guess the high volume node here. It was close enough to the value area high. So we're watching that 87 level, and we were actually right. If we accepted back into here, my issue was we trade. There's no knowing how low we could go, but we would trade a crop ton lower. Potentially down to this lower distribution here. That's what happened at the open, right? We initially didn't accept, right? We opened up here. We didn't want to trade higher, so we rotated back down to prior value. Right down here, rejected that. So what happens? We go to the other end, right? We try it again. This time did a better job staying up here, but this, trading under 87 was not, is a little, I was about to flip bearish here when we saw this get under, because I trust my levels quite a bit, and it's gotten to the point where they're pretty spot on. So when I see action like this, it makes me want to go short when we're trading under here and just constantly rejecting 87 from the underside here, and once again here, right? I'm just always second guessing myself when stuff like this happens. But if I typically don't want to enter a trade unless I have really great risk to reward. So meaning, if I wanted to be short here, I would have been shorting up here, up at 93. Okay, simple as that. And then maybe leave a couple runners, and I could potentially catch that breakdown, right? And this is a good trade if that's the level, 87, and we're failing to get back above it. If you're looking for a quick scalp, that's fine. It just didn't happen today. Dips were bought, and it's nice when we move up like that, but once we got over this 93, it's just game over. First couple times we failed to stay above, and this was the first look of it holding. And what do? We just hold it every freaking time we test it, and then go right up to the next level, right? 4209. And then 15, I think, was the high a day. Yeah, it was, which is annoying because I hate it when I miss levels. It's just right in front of me. I should have gotten it, but all I was focusing on was the extreme here, this sort of low volume node between the two balances here. That's why that 20 is a level. So, anytime we get back over this 209, 20 is going to be the level, and 25 to essentially 4250 is your next little balance zone. Okay. And then, that's when we run into this issue here. So I can worry about that when we get there, but just a short lesson I wanted to do on balances. Hope you guys sort of get where I'm coming from. I know I've talked about it plenty, but thinking about markets this way has really, really helped me. So I'm just trying to, you guys don't have to trade the way I do. It's just a different way of thinking. And if you guys take bits of what I say and apply it and it works for you, great, right? That's what I'm here to do. So hope you guys got something out of it. And let's just keep killing it the rest of the week.